All right, it's 9:30. We're waiting to see if there's an immediate move for Goldman Sachs. Bell just rang, and it's slowly going down. We've lost $20 on what this is one reason having a strategy is a good reason, because when you start to make predictions, they can go the wrong direction. However, it is sometimes when there is a good report at earnings that whales and big traders can force that particular stock down before the market open, and then buy back in and make the stock go up in value throughout especially the early morning and throughout the day. But it is not shooting up. In fact, we are slowly going down. So this is one reason that it is recommended that if you trade, you have a good strategy with rules. I have a safe strategy with rules, but I broke my rules this morning based on predicting that the stock might go up based on a great deal of information. The rate cuts information, the profits that they've made from their IPOs, the next upcoming rate cut of more than likely 25% in less than 14 days on October 28th, or I believe it's the 29th actually, so 15 days. But again, we are acting as investors. We are not putting a great deal of our portfolio balance into any one individual stock. So as this goes down, it's not really hurting us to any major degree. I am spread out over 200 stocks. So if this continues down today, tomorrow, even on the next week, even a month or two, no big deal. Goldman Sachs, more than likely, historically speaking, will be around. They're not going anywhere, and we will eventually make our money back on our purchase of the 3 shares at $788.45. So we'll eventually come back to Goldman Sachs, take a look at that. But right now, I need to get and focus on my day trading for the other stocks that I have. And I will be back later today recording my sales and buys within my swing trading strategy. Good afternoon. Welcome to my channel, The Day Trader. I am starting off today with Goldman Sachs because this morning we looked at the earnings as they were released, looking at what kind of price action we would have with Goldman Sachs. I chose to not follow strict rules of my strategy, and I decided to buy 3 shares of Goldman Sachs while the fast-moving average, yellow line, is below the slow-moving average, the blue line. And typically, I try not to buy stocks when we are in this type of price pattern. But I decided to make a prediction based on information from the FOMC cutting rates back in September, and Goldman Sachs having great month in September for their IPO releases, which were quite profitable for them in all areas of business except one. They far exceeded expectations, and they underperformed in their equity trading branch. They did not meet expectations. I doubt this is why the price went all the way down to $742 today. I think this is just people taking profits, and this is possibly bigger legacy companies with a little bit of market manipulation, forcing people to hit their stop losses and then taking profits on the way down just to buy back in and push the market up substantially. But that's just my theory. At any rate, we bought 3 shares, we're maxed out with 4, and at some point, Goldman Sachs will turn around and we will eventually collect a profit. Again, if you're new, or if you've been watching my videos, we act as investors. We're not necessarily day traders trying to make continuous profits all day, trying to sell stocks just because the price moves against us and lock in those losses. Then just to find a stock that we're trying to buy into, and hopefully that'll go our direction and we'll eventually take profits. What I'm trying to teach you is we want to be investors, and we're just swing trading our long-term investments. So current price is at $773. I bought 3 shares at $788. So after dropping down to $742, we're back up to $773. We're only basically just a $15 off, so I'm only down $45 for the day on Goldman Sachs, which is another reason why if you're a new trader, or you're thinking about getting in, you do not want to put all your money into one stock. You do not want to put all your money into 2 or 3 stocks. You want to make sure that you have enough money to continue trading if whatever you invest in goes against you. So now we'll look back at our S&P 500 SPX chart. And for the day, you can see we opened up around 6,600, dropped down to 6,550, back up to 6,637. I'll zoom in so we can get a better look at this. So I'm going to highlight this box here. We're going to drag this over. Keep that straight. Hit the bottom of that red candle all the way back to here. We want to hit the bottom of that. And this is a zone. As you can see, we had price drop all the way down on Friday, bounce off of this bottom time frame on this, price point. So it gained support. And then again today, we basically got near that. We hit support again. So here we have an area of support that we want to keep our eye on at any other point today or in the future if price starts to go back down. That is a day trading stock. We just sold some XLU. All right, part of the swing trading strategy is selling stocks. We do have a few stocks to sell, and we do have a few stocks that we're going to be placing sell orders on. First stock we're going to look at is Robinhood, HOOD. Robinhood's been going up for more than 3 months. We've got a nice run on this stock. I say we, for those of you who followed me and you made the choice yourself after you've done research to buy in at the same time that I might have bought in. But we have Friday, we had the price cross below the fast moving average. We had a red candle down, although we opened higher than the Friday close. However, this morning we absolutely do have a continuation, maybe, but we do not have a true continuation. Price currently is higher than the close of Friday's candle. So we're in a similar situation. For those of you who saw the video yesterday, I had stated that we were going to look at Robinhood at the end of the day, because when I was making the video, price of the yesterday's share for Robinhood was higher than the close. However, I didn't have an opportunity to look at that at the end of the day. I had to leave and go take care of some personal business prior to the ending the video, and I finished it this morning. But we are in a similar situation. At the end of this video, or towards the end of the day, I will take another look at Robinhood, and if price is lower than Friday's close, then we will look to sell Robinhood. But right now we're going to move on to Dell. We received a price possible sell alert this morning for Dell. And it looks like we might be in a similar situation that we were with Hood. We had price cross Friday and close over the fast moving average, and then we had price open higher than the close, and we did not drop back down. So now today we had it open lower than Friday's close, which was a continuation. However, price is now higher than the close. So we're going to have to take a look at Dell later and see if the price of Dell changes direction and closes or is lower at the time than the close of Friday's candle. So another stock we are going to take a look at is Cardinal Health, which is CAH. Zoom in, take a closer look. So we had price move below the fast moving average on Monday, not Friday like the other stocks. Although it did move down Friday, we didn't cross the fast moving average until yesterday. We clearly are in a continuation move down. This is the continuation candle confirming yesterday's cross. So we are hopefully going to be selling something, a couple shares at a profit. Current price is $153.76, and we will not. All of our shares that we purchased are at a higher price. So we are going to find Cardinal Health in our watch list. We're looking to sell 2 shares. Right now I have, let's see, 2 shares that I purchased at $154.29, but I'm maxed out with my 4 books with 1 share each. So we're looking to sell 1 share on this cross of the fast moving average. Tomorrow, if we have a continuation price down, still going down lower than the close of this candle, because this has crossed the slow moving average, then we will look to place a sell order on another book. But right now we're looking to place a sell order on one book. I purchased at 154.29, so we go to the hundreds place. 10% of that is 10 cents, and we add 10 cents to our purchase price, making it 154.39. 154.39. Good till cancel extended hours, confirm and send. And there's our sell order for our one book, one share for Cardinal Health. All right, next is Palo Alto, PANW. Zooming in, and we had price on Friday move down below our fast moving average. We did not have continuation on yesterday, and we still don't have a true continuation. Even though we opened up lower than yesterday's close, we want price to be lower than the close of this candle in order to be a confirmed possible trend downward. So we'll take a look at that tomorrow. All right, so we're going to take a look back at Dell, see where the price is sitting on that before we move on to stocks that we can possibly buy. So Dell price is currently higher than Friday's close, so we won't be doing anything with that. Let me zoom in. Price is currently higher than Friday's closing candle. And the other one I said I was going to take a look at is Robinhood, HOOD. And price is moving up and higher than Friday's closing candle price. So we will not be looking to place a sell order on any Robinhood shares. We'll take a look at Robinhood tomorrow, just as well as taking a look at Palo Alto. All right, at the beginning of the day, we did have about 10 stocks that we needed to take a look at that we received possible buy alerts on that were actually lower than our purchase price, but we're not going to be placing any sell orders because the S&P 500 has turned around, and now almost all of those stocks are now above our purchase price. They're no longer in a downtrend, so we will not be either selling nor placing any sell orders with the market going up. We do, however, of those, we do have 2 stocks that we need to place sell orders on. I'm going to do one more on video. I typically just like to do 2 sell orders on the video, so not to take up too much time. So we are going to take a look at Edwards Life Sciences, which is EW. And you can see we're clearly in a downtrend for 5 days, basically. Now, even though Edwards Life Sciences is in an uptrend and a green candle, we have the fast-moving average crossing below our slow-moving average, and we are currently significantly lower than our purchase price of $81.73. So we're going to go ahead and place a sell order on the last 4 shares. I maxed out at 4 books with 2 shares each. So with Edwards Life Sciences coming in here to our watch list, we're looking to sell 4 shares. They were all purchased, all 8 shares, or excuse me, sorry. What I was saying is all 8 shares are purchased at the same price of $81.73. So we go to the tens place, which is actually an 8. And 10% of that is 8 cents. So our sell order price is going to be $81.81. 81, 4 shares, good till cancel, extended hours, and confirm and send. So now all 8 shares are sitting in a sell order. The last one that I'm going to place a sell order on, in case you also own the stock and you do some research and decide that you may want to place a sell order or sell if you're able to, is Okta. All right, we've got a little bit shy of $3,500 to put towards purchasing some stocks. We do have a stock that I've been hoping to be able to buy back into, and the reason is if we go to our monthly chart and we pull up DLO, which is DLocale, you can see we just crossed and confirmed the fast moving average on the monthly candle. The other charts that we look at is on a daily candle. But when we have the time frame on the monthly candle where the fast moving average crosses back above the slow moving average, this is a great time to buy back in with all of our books. You can see it's been down for 3 or 4, possibly even 5 months in a downtrend, and we're just now at the beginning of what might be a turnaround for DLocale. And I like to max out with DLocale at 64 shares. That's 16 shares per book. So I currently have 1 book. So we need to purchase 3 more books. So that's 48 shares. We'll just come in here, type in 48. And we're looking to purchase 48 shares. And we got them at $15.47. So now that we've made that purchase, I could take off this identifier. We're going to remove that drawing. That identifier is a quick reference to let me know that if I'm in a chart and I see that 1M for the 1 month chart, then that means I do not want to buy a stock because that means that the fast moving average is below our slow moving average. And on the monthly chart, I definitely don't want to buy in on that because we absolutely can be in a long downtrend if in that particular situation. But we've crossed now, and hopefully we're going to be up for quite a while. Hopefully it won't just turn right back around and go down next month or 2 months from now. With that done, we're going to take a look at Celsius Holdings, which is CELH, Celsius Holdings. Enter. Now we are in an uptrend. We do not have a confirmed, this is on the monthly candle. We haven't moved back to our daily candle. So on the monthly candle, you can see we still are below, we just crossed the fast moving average above the slow moving average. However, this is not a confirmed continuation. This candle is still an active candle. So at the end of the month on October, we'll find out on November 1st whether we stayed above the slow moving average or whether price fell down the remainder of the month, and then we turned back around and we were now in a position lower than the slow moving average. However, because we do have a cross, I will not purchase all the books that I would want, all 4 books. I will purchase 1 book because this is a good trend. It is a good move, but I just don't want to max out all of the books until we actually have a confirmed closing candle that we are above the slow moving average and possibly beginning a trend upward. So for Celsius Holdings, I have allotted myself 20 shares at Celsius Holdings, so that would be 5 shares per book. So we're going to pull up 5 shares in our active trader and go to purchase these in the active trader. We got them at $62.53, and they immediately become part of my day trading stocks. All right, I've already just placed the sell order for 10 cents higher than the purchase price. Celsius Holdings doesn't really move a great deal. Doesn't move very fast. So we're going to take a look at our next stock, which is Datadog, DDOG. DDOG. Try that again. Enter. There we go. Now, Datadog, we're in a similar situation. However, I did not have the money to purchase all of the books for Datadog when they did actually cross, and we had a confirmed cross and a continuation of the green candle 2 months after the initial cross. So now that I actually have the money, I've got $2,400, we're going to max out. And with Datadog, I purchased 4 books, each book having 1 share. So we're looking to buy 3 shares to max out. We already currently own 1, and we should be able to get this at $161.99. So I'll mark this off on my sticky note wall. Have been following my videos, you've seen that as we, over the past several weeks, have received possible buy alerts. I haven't been able to purchase those because we did not have enough money in our trading balance. And that's because for 5 months, the S&P 500 has just been going up, which means most of our stocks have been going up. But over the last several weeks, especially with last Friday, and investors taking profits for some stocks over the last month, we have been able to sell some of our stocks that we've been holding for quite a while. Therefore, we have money in our balance, so we can now purchase some of the stocks that I've been hoping to be able to purchase, since especially we've got crosses on the monthly chart above the slow-moving average. I believe that this is the optimum time to buy into stocks. Even though we do buy in and we want to max out on the daily candle, the monthly candle is a much better indicator that the long-term trend may be turning significantly for an extended period of time. It is not always the case, but statistically speaking, it does work that way. Oh, fortunately, we do have a few more to look at. We are going to next look at Newmont, and Newmont is a mining company, gold mining company. NEM for Newmont, and they have been going up. Now, unfortunately, I didn't buy in here at this cross. I didn't buy in to Newmont at $55.61. So I either bought in on this candle or somewhere around on this candle. I don't have the exact date in front of me. But if I go back into the old account, go into there, and Newmont, I bought 9 shares on June 2nd. So which candle is June? May. So I bought here June 2nd, 9 shares. I already had 3 that I was day trading with. So when I closed the old account and transferred all of those shares into the new account, which is why we have a 0 on our purchase amount for the 12 shares to complete that we had at the time. So with Newmont, we're going to switch back out of again, we're still in the monthly chart. We're going to go back to our 3-month and 1 day, the day candle. So on the monthly chart, the candle takes a month to aggregate, and on a daily chart, the candle takes 1 day to aggregate. Okay, so yesterday we had price move back above the fast-moving average, which sent us an alert. This morning, we have a absolutely clear continuation of this cross, which means we're going to buy 1 book, which is 3 shares. I max out at 12 shares for Newmont, as you saw on the monthly chart. However, 3 of the shares I've been buying, I've already day traded 27 shares. So that's 9 times. So I've already traded Newmont 9 times a day because the price is going up, and it dips a little bit, and then I try to sell high and I buy low, and it's been sort of choppy. If we take a look at our 1 day, 2 minute, or we just leave it on the 1 minute chart for speed. I don't need to go. You can see where I try to buy high and sell low. So that's what we do. And I've already done this, as you can tell, 9 times today. Excuse me, I misstated. I don't buy high and sell low. I want to buy low and sell high. So, like, for example, we bought 3 shares at $90 and 60, we'll round that, it's going to be rounded to 63 cents. And I held on to it until it started to turn down, and we sold it 66 cents. So we made 3 cents a share. And if I zoom in here, it looks like it's starting to turn back around, which means I'm going to buy back in. And you can see this is after Newmont went down a little bit today. We reached a high point of 91.24. So when I buy back in, I'm buying at a lower price compared to all of these other stocks that I bought as it was trending upward. But I am not teaching you how to day trade. I'm just showing you that I day trade as well as swing trade. If you're watching my videos for the first time, this is what I do for a living. I'm not making my videos for those of you who are also trying to day trade. My videos are for those of you who are trying to swing trade. So zoom back in here. So we're looking to buy 1 book. I'll eventually buy back in. It's actually, when I zoom in, it was still slightly on a downtrend on my other chart. So we're looking to buy 1 book at 90.58. Now 90, well, we got it at 90.58. So mark that on my sticky note wall. All right, another stock. We're looking at the ETF IWM. And this is the ETF for the Russell 2000, which is the 2000 best companies that are small cap. The problem with the IWM is more than half of those companies are unprofitable. But the IWM, look at that. I didn't even know that the IWM was moving that much today. So we've gained more today than what we lost last Friday, I believe. Yeah, if we just roughly look, we've got 1 and about 3/4 squares in distance. And if we go from here, we've got roughly 1 and, well, we're right about the same. But it's close. Either way, I don't need to measure it out. Don't need to know exactly. All I know is it's going up, and we're looking to buy into the ETF IWM. And that's because yesterday we had price go above and close above the fast moving average, and this is a clear continuation, even though it opened significantly lower than it even opened on Monday, yesterday. Now on the IWM, I max out with 1 share per book. So we currently have 3 books, so we're going to buy 1 more share. And that's not going. Let's try it again. Buy it down here at 249.43. And we got it at 249.42. All right, we've got another stock that we're going to take a look at, and that is Natera, NTRA. I currently have 2 shares of Natera, and I like to be maxed out at 8 shares. So that would be, or 8 shares. That'd be 2 shares per book. We currently have 1 book. We had price move above and close several weeks ago, actually several days ago. Whoops, I need to back this back up. Even though we crossed above the fast moving average, we just had the fast moving average yesterday cross above the slow moving average, and we have a continuation of that cross. We also have the MACD, which is also, both indicators are above the midline of the histogram. That's a good positive signal. If we were below the midline of the histogram, that could be a negative indicator, especially if the RSI would be either level or going down, but we seem to be in an uptrend on the RSI as well. So we're looking to max out. Now, maxing out on this cross, it works out more often than not, but it's not as strong of an indicator to max out my books as the monthly cross. But the daily cross happens more frequently than the monthly cross. So we're going to be purchasing 6 shares on our active trader, bump this up, and hopefully at 175.61. So at 175.61, that's going on my sticky note wall. 175.61. All right, I actually need to sell 1 book, I believe, of the Natera that I just purchased, because I need a total of $1,300 to buy back into 2 of the stocks that I'm working on my day trading strategy. So we're going to pop this down to 2. And I bought them at 175.61, so we're just going to place a sell order at 175.62, and if they sell shortly, that'll be great. If not, I'll just force myself to sell at a small loss because I didn't do my math to be able to buy back in to Caterpillar and McKesson. Okay, that was DLO, day trading stock. Actually, I don't need to do Natera. My notes weren't completely clear, so we're going to cancel that sell order. I already have Caterpillar. I only need McKesson left in my day trading strategy. So our swing trading is about to be finished. I got a few more stocks to take a look at, but I want to do my math. So I need $781. We're just going to round that up to $800. And we're going to round down our current balance to $1,100. So I got $300 safely to spend. All right, another stock we're going to take a look at is NRG. It's It's an energy company. So we had, not only did we have price move above both the fast and the slow moving average, yesterday we had the fast moving average cross. And even though we have a green candle and the cross is again above the slow moving average, I do not want to buy in until price is above this candle. But even if I did choose to buy, I max out with 12 shares for NRG, which is, 12 shares for NRG, which is 3 shares per book. I keep stumbling. Forgive me for my stumbling and bumbling while my exposition is going on. But is I don't have enough money to buy 3 shares of NRG. So we're going to move on to our next one on the list. And that's GE Vernova, GEV, which I believe is an expensive stock. So again, not enough money there. So we're going to move on over to Celestica, CLS. And where are we? We do have a cross. However, our price is currently significantly lower than the price cross yesterday, as it opened up high and went down significantly and then pushed back up. But we currently have price just barely over the fast moving average. So we will look at CLS tomorrow. CLS. Well, I still don't have enough. CLS, I like to max out at 16 shares. So that would be 4 shares per book. So I don't have enough money for CLS either. All right, that's it. That's everything on our sell alerts. It's everything on, my sell alerts. It's everything on my buy alerts. I am done with my trades for the day. If you're following me, take a look at that. If you're in the market, take a look at what I did, do some research, and maybe you might decide that those trades are good, that those sells are good, that the buys are good, and you might want to participate in those. If you're new to my videos and you're new to trading, the trades that I'm making are swing trades. Just keep that in mind, meaning that if you don't make the trade today, if you do some research and you think it's a good trade, whether it's a buy or a sell, you can do it tomorrow. You could do it sometime this week. You might even be able to do it on into next week, because the trades that I'm looking for, especially the trades that cross on the monthly chart, hopefully those will be going on for weeks and months. So you have time, if you choose, to make some of the trades that I made that were on the monthly crossover, and leave a comment. Let me know. Let us know. If you have any questions about the trades I've made and are making, leave a comment as well. So since my trading is done, I'm going to go back to the SPX, index for the S&P 500, and you'll see that we have moved up and out of this zone, the price zone here. At one point, we had pushed significantly higher, but the bears apparently have been pushing us down, pushing the SP 500, and you can see it. It's going down ever so slightly, even as we're continuing to make the video. And before we move on to our chart of the day, let's go ahead and take a look at Goldman Sachs. So Goldman Sachs had pushed us down to 740 after I bought it at 788, I believe. Let's see. Yep, bought it at 788.45, bought 2 shares. Again, violating a basic rule that I have in place based on what I thought was an informed decision. They did well on almost every aspect, but ultimately Goldman Sachs will turn around and we will ultimately make a profit, but we're only down $16 from the purchase that we made today on 2 shares. 3 shares. Now, tomorrow morning, we do have 2 stocks that are going to earnings. They're going to be releasing their earnings report tomorrow morning. So we want to go to ASML. We currently own 1 share, and that's sitting in a sell order. We're going to cancel. I'm going to cancel my sell order just in case tomorrow morning price goes up significantly. I don't want that price to trigger, and we sell that stock prematurely. We want to capture as much of the gain as we can, if possible. And the other stock, end of day, 4 o'clock. Trading day is over, at least for the New York Stock Exchange. The other stock that we have going, reporting earnings tomorrow, is Bank of America. And Bank of America, we currently have 8 shares. So when I'm going to earnings, I like to sell half of the shares that I own. Unfortunately, with Bank of America, I have 4 shares per book, so I have 2 books, and both books are sitting in sell orders. The current price is lower than my purchase price, but just in case the Bank of America turns down for a bit tomorrow, I'm going to leave 1 sell order active. That way, if it spikes up before it turns down, which can happen, it happens frequently, we might get a spike and then turn down. We'll at least get our money back. We'll make a 10 cents per share profit. If you've been following my videos, that's basically the rough amount of profit that we on average have for each share when we have a sell order. But we're going to cancel the other one. In case price does go up, at least we'll have 4 shares that we capture a big move on. So with that, I am done for the day on our trades. So we're going to go back to the SPX index for the S&P 500. And now we'll take a look at our chart of the day. All right, the chart of the day is DLOCAL, DLO. And they went up 10.4% today. Let's take a look. What you can see right here, they had a great, huge, wonderful day. The DLOCAL is the chart coming into 1 day and 1 minute. We'll expand this out. Starting at $14.39 at the beginning of the day and closing out at $15.69. This was the stock that was just shortly breaking out and above the slow-moving average on the monthly chart. We had the fast-moving average break above the slow-moving average on the monthly chart. We don't need to take a look at that again. So if you don't own DLO, you may want to do a little bit of research, take a look at it, and you might want to become an owner. Going back to SPX again, and our regular chart, daily chart. Before we take a look at my realized earnings and the portfolio performance to yesterday's date, could you please like, share, and subscribe? That way I might be of use and help to other people that are interested in becoming more profitable or entering the markets. Let's go down here and take a look. And we'll see that my profits today, this is including my swing trading strategy, and my day trading strategy is $493.54. And this most recent account, my performance to date is 7.40% compared to the S&P 500 at 4%. The old account, prior to transferring all the funds to the newer account, I was performing at 16.26% compared to the S&P 500 at 10.54%. And combining the two for a total of 23.66% is my performance compared to the S&P 500 at 14.54%, giving me a 9.12% better performance over the S&P 500 using both my swing trading strategy and my day trading strategy. But you two most likely would be performing better than the S&P 500 just using the swing trading strategy that I am showing you. Hopefully, if you have watched some of my videos and I've gained your trust, please leave a comment. Let others know that there is somebody that's trusting my trades and my information that I'm providing in the videos, especially if they are people that do not have a retirement account. So there we have it. We are finished for October 14th, Tuesday. I hope you all have an absolutely amazing rest of your Tuesday afternoon.